Today we'll be talking about how the collapse of FTX has caused a slight breakdown in the crypto industry. Given that the crypto market has been crashing for the past year, we need to figure out whether it is due to the company mismanagement or there are some flaws within the industry itself. In today's video, we'll be discussing how FTX fall has affected the confidence level of the cryptocurrency market. Before I continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about how this crazy change occurs. During the pandemic, many governments decided to shut down the economy while waiting for the vaccine to arrive. Based on past history, vaccines usually takes a few years to research. Governments started to pour money into their citizens so that they could tide through this recent lockdown. However, due to the advancement of technology, biomedical companies managed to research the vaccines that could decrease the chance of severe complications from COVID-19. As the vaccines rolled out to the general public, most of the governments feel that they could slowly reopen the economy. Due to the successful reopening of the economy, many people started to have excess amount of cash lying around. Due to the supply constraint, sudden rise in demand is not met with the current supply. Moreover, when some investors look at the market performance in some high growth companies such as Tesla and ARK, they look at other investment opportunities. Due to low cost debt being tossed around in the market, capital is easy to get by. Such investors decided to invest in cryptocurrency that could give them a huge profit to risk ratio. As cryptocurrency have been creeping up to be the 12th sector of the economy, some investors want to participate in this new trend by using the money given by the governments. In 2021, cryptocurrency has seen a huge run in the price, and most investors feel that this will continue in 2022. Next, we'll be talking about the backdrop before the collapse in the FTX. Despite the rise in the popularity of cryptocurrency, the US government decided not to regulate the industry. Due to the lack of regulation, it's very hard for any checks to put in place to prevent fraud from taking place. Even though it is unclear if fraud have taken place, if rules have been put in place, this would not have blown up to such an extent. Therefore, part of the blame should be placed on the regulators. As the Fed started to raise interest rates, investors started to sell off their high growth investments. One of which is the cryptocurrencies. But the investors did not realize that just created a crackdown in the market. Secondly, we will be talking about the company behind this crackdown. The alleged cryptocurrency exchange FTX may have more than 1 million creditors, according to a new bankrupt filing, hinting at the huge impact of its collapse on crypto traders. The company has declared bankrupt. Typically, in such case, debtors are required to provide a list of names and address of the top 20 unsecured creditors, the lawyer said. However, given the scale of its debt, the group instead intends to file a list of 50 largest creditors. 5 new independent directors have been appointed at each of the FTX main parent companies, according to the filing, including the former Delaware District Judge Josephine J. who will serve as lead independent director. This year has seen a spread of crypto firms, including Celsius and Voyage Digital, fail as they contend with a slump in a digital asset price and ensuing liquidity issues. In earlier bankrupt cases, traders on this platform have been designated unsecured creditors, meaning they will likely be at the back of a long queue of entities seeking repayment from suppliers to employees. Before it collapsed, FTX offered amateur and professional traders spot crypto investing as well as more complex derivative trades. At its peak, the platform was valued by investors at $32 billion and have more than 1 million users. The company failure has had a chilling effect on industry, with investors selling their positions and moving funds off exchanges. Next, we're looking at how the former CEO feels about the collapse of his company. Former FTX CEO Sam Bankman-Fried said the crypto exchange got overconfident and careless and it grew into a 32 billion juggernaut. He comments comes days after FTX filed for Chapter 11 bankruptcy protection. At the end of a catastrophic week, the company spiraled into a liquidity crisis as customers demand withdrawal and viral exchange finally rippled up its non-binding agreement to buy the company. The founder said the company assets were fine 2 days before he was desperate for rescue because of a liquidity crunch. He has since said in tweets that he's trying to recover deposits for the company customers. Thirdly, we'll be talking about how a short sellers feel about the collapse of the company. Carson Block, founder of the short-selling investment firm Money Waters, think the collapse of the exchange FTX under Sam Bankman-Fried is a great example of greed and FOMO. Block told CNBC. He has seen the business trajectory of the former billionaire and thought there was obviously something wrong. Quote, Bankman-Fried went from zero to I'm worth $20 billion and putting our logo on Major League Basketball umpire's uniform and on billionaires hits area. It seems like really trying hard to establish yourself as a household name, Hancock Block said. He had concerns about Element Research trading firm SBF co-founder that was recently reviewed to borrow billions in FTX customer funds without their knowledge and contribute to FTX bankruptcy. Block said a September 2021 article found Element assets were substantially in the cryptocurrency Solana, which at the time was plunging in value, raising questions about its depth and source of funds. Block is a crypto skeptic who described the recent surge in the industry as a bubble based on suspension of disbelief. Block gained prominence for alleging and exposing instances of fraudulent accounting in US-listed Chinese companies. Next, we'll be talking about if there's any chance that the company will be safe. Binance chief strategy officer said it took his company 2 hours of due diligence of FTX to determine the Sam Bankman-Fried's crypto exchange was beyond saving. FTX's speculative collapse was first made apparent when Binance, the world's largest exchange for cryptocurrencies, said on November 8 that it signed a non-binding agreement to acquire its smaller rivals for an undisclosed sum. FTX was in the midst of a liquidity crunch with customers demanding billions of dollars in withdrawal a day. It was money that FTX didn't have because it was using client deposits for other purposes. Quote, somehow they were always spending more and more and more and more money. Even said, quote, we never understood where the money was coming from. It just never made any sense to us. End quote. Finally, we'll be talking about how the collapse of FTX could be a blessing to the cryptocurrency industry. As most investors feel that it will be very hard for hedge fund and venture capital to enter the industry without any regulation, I feel that due to the collapse of FTX, the US government has no choice but to roll out rules to regulate the industry. Moreover, given that many innocent people have been burned by the collapse of FTX, the politicians would be more inclined to pass laws. This will encourage more hedge funds to fund money in the industry, thereby limiting the volatility in the industry. Therefore, despite the loss in capital, I feel that this will motivate the politicians to regulate the industry. In conclusion, despite the loss in capital, more money will be pumped in the industry after regulations have been put in place. It will be a matter of time before the use of blockchain will become a strong factor for the US economy. Therefore, I feel that there is still a boom market in the cryptocurrency, but it's not right now. With that, thank you, have a nice day, goodbye.